morning and welcome to this week's Long Island Money and Business, brought to you every Sunday morning on 540 AM WLIE from 8 to 8:30 and on the web at WLIE540AM.com. Brought to you every Sunday by Panaro, Silverman Partners, your own family CFO. Joined by my partner John Panaro, I'm Jeff Silverman. Thanks for tuning in on a Memorial Day weekend. So John, good morning.
Good morning, Jeff. I hope everybody's weekend's off to a good start.
Yeah, and Memorial Day, start of summer. Not really feeling like it this weekend, but hopefully things get a little more improvement as we go on.
Gotta happen sooner or later.
And with Memorial Day, we want to reach out and give our thanks to all those who support our country and the services and those who have given their lives and the families that are affected by it. So thanks so much. Appreciation from us here on the show and at the studio. And with that, we're going to kind of shift to, I guess, an area that's painful for a lot of people is really dealing with their taxes and dealing with IRS issues and things of that nature. And we all know, or we all should know, that we have to file our taxes both as individuals and as businesses. But sometimes things happen, and people, good people, bad things happen to good people sometime. And that's why we're very fortunate and pleased to have as our guests today, we have Karen J. Tenenbaum and we have Yvonne Cort. And they have a practice that concentrates in IRS and New York State tax matters on a lot of different ranges. And they're both experienced attorneys. They're based in Melville. And they're going to speak a little about their practices, how they work with individuals and businesses, and some of, let's call them, the hot issues in tax right now. There's a lot in the news as far as tax. A lot of people have heard about all the issues going on with the IRS. So we're kind of in tune with tax. And we're also with the sequestration, which John and I devoted a show to a few weeks back. And a lot of that's kind of surfacing now with the cutbacks affecting Memorial Day weekend with dropping different services and with the parks opening, certain things with the funding not being there. So we thought it would be a good time to kind of deal with taxes, deal with tax controversies and other issues affecting people. So Karen, Yvonne, welcome to the show.
Good morning. Thanks, Jeff and John.
Morning, ladies.
Hello.
No, we're glad you're able to come on, Yvonne. We did speak with you a few weeks back.
That's right.
Right around, I guess it was a couple of weeks before tax time, where we were kind of speaking about what happens if people are in trouble then. We promised we'd have you back in here when things settle down a little bit. And also, this is probably a time where people are thinking about tax also because if people haven't filed their taxes or they're in trouble and the April 15th period has gone by and now they're kind of focusing, now what? We haven't filed.
Well, if they did not file an extension, it's too late to do that. That had to be done by April 15th. However, they can still come forward and try to work out arrangements with the IRS, and the sooner the better, because the penalties and interest keep accruing.
And they could always do a New York State voluntary disclosure where they would avoid the penalties, even though it's a late filing, and avoid criminal action as well.
So right now, I know a big area of your practice and a big area that's affecting a lot of people are issues regarding residency and New York State and New York City taxes. So if you could just tell us a bit about residency, what it is, who's affected by it, who should be concerned about the residency affecting New York residents.
It's the perfect weekend. Everyone's heading out to the Hamptons. How many people have houses out in the Hamptons and they don't realize that there might be a hidden tax cost to owning that house? Residency rules affect people that have more than one home. So let's say you live in New York and you have a house in Florida. Or you have an apartment, you live on Long Island, you have an apartment in New York City, and you work in New York City. Or you have a house in the Hamptons, and you perhaps live in New Jersey and Connecticut, and again work in New York City. So if you have more than one home, New York State or New York City may say, we think you owe taxes here. And again, that's very relevant. Seeing the latest cases, people think, oh, it's only a vacation home, or it's only an apartment in the city for my daughter. And it really doesn't affect me. And yes, it does. There's a hidden cost.
So I guess it's people kind of sitting back. They're not thinking so much about that. So who's alerting them to the fact that now they have a residency issues? Who's coming after them?
New York State and New York City. You'd be surprised the expense involved and the cost involved. So if you live in New Jersey or you live in Connecticut and you work in the city and you have this house in the Hamptons that maybe your parents use over the summer or you use it for weekends, and all of a sudden New York State says you owe taxes here. A recent case, the gentleman ended up owing over $1 million in tax, and he barely used that place out in the Hamptons. He only used it 16 days a year, and it didn't matter that he called it a vacation home. It was suitable for year-round living, and his in-laws actually used it, and it was enough to send the case back for penalties. So in addition to the taxes, he owed interest and penalties.
And I think what people don't realize is not just ownership of the home, and it's also not how many days you actually spend overnight in the home. You can have the place and only use it, as Karen said, 16 days a year, or not use it at all, not use it very much at all, and it would still count as a residence for New York State purposes.
And let's talk about why this is relevant. If you are taxed as a resident in New York, you owe tax on all of your income, no matter where it's derived. So you think you don't owe money to New York, but they think you owe 100% here. And that could be, again, very expensive. We see it, it comes up when you are domiciled here, or you could be considered a statutory resident. And what that means is you just have to have a permanent place of abode, some place to live that you have access to, and spend more than 183 days here. And a lot of people just think, oh, if I'm a New York, Florida, I bounce back and forth between New York and Florida, all I have to do is spend 6 months and a day there, and that's enough. And that might not be enough. There might be other rules that affect you.
Yeah, the rule regarding domicile, which is basically where is your home, where is your heart, where do you intend to live? It's very hard to prove that, and New York State asks you for proof because the burden of proof is on the taxpayer to prove that where they really do live. So in the example where you have the snowbirds who go to Florida and they spend equal times more or less between New York and Florida, that can get them in trouble on this point because they really have to show that they are really living in Florida, that that's their home, that's where they've made their life, that's where the things that are important to them are.
And we
Is
always
ownership
say,
a trigger at all, or do rental properties figure into this discussion at all?
You could own or rent. And we always say a simple question like where do you live now becomes something that you might need an attorney to prove.
And what's interesting, you had mentioned about how are you told that you have a problem? Sometimes you get a letter in the mail from New York State, and it looks like a very simple questionnaire just saying, where do you live, how many days, where have you been, what do you do, what are your prior addresses? And people fill it out and say, oh, this isn't a big deal, I know the answers. And those answers can come back to haunt them because they're doing it off the top of their head without consulting a professional. And later on, the state might be saying, well, wait a minute, are you lying now or did you lie then? Which one is the real answer?
Right. Well, I have a question. We talk a lot as far as Long Island. A lot of people, we're referring to Florida because a lot of people have residences there. To my knowledge, Florida does not have a state income tax. But let's say you're dealing with someone who's in another state that does, and whatever that state is, and I don't know enough about the individual states, and then all of a sudden you've been paying state income tax to, let's say, North Carolina, whether they have one or not, just for example purposes, and then New York State comes and determines, well, no, you're the New York State residents, but you've been paying maybe a lower rate to North Carolina all these years. Can you then try to get a refund from the state that you've been paying because you think you're the resident there and then you're not? Or are you kind of then stuck on both sides?
Well, okay, so first of all, there's a statute of limitations that may apply. So the second you get audited by New York State, you might want to file a protective claim in the other state so that you're not closed out of getting either a refund or whatever. But it is actually constitutional to owe tax in 2 states. So,
it is. Huh.
And you're not going to get a credit on the intangibles, so dividends, interest, things like that.
Right.
You might get a credit on your earned income. So
I
if
see.
you earn it in New Jersey, you might have
Or real estate income, for example.
Right.
You would get a credit.
So when they come back and they say, and you're a New York resident and you're disputing it, okay, because of that, does it go through a hearing process? Where does an attorney and law firm get involved at what stage do they get involved?
Well, ideally, we would like to get involved before they have the audit and in the planning stages, because really this is an area where planning makes all the difference. If you know you're going to move out of state, or you want to buy a residence in another state, or before you buy that apartment in the city, it's a really good idea to talk to your accountant or a professional to see what kind of records you can put together, what kind of what date during the year you start renting your place can make a difference, because the permanent place of abode has to be for substantially all of the year, which is usually 11 months. So if you start renting the place in March, you may not be a statutory resident for that year, but if you started in January, you might be. So you might want to really think about all of this in advance. And then it moves on to the audit. And really from the beginning, you want to have a professional involved because you want to see what the issues are. And it's important to gather your proof. You need documentary evidence, credit card receipts, airplane proof of airplane flights, Easy Pass records, phone records are things the state looks at. And you want to show your pattern of life, a diary or a contemporaneously kept calendar. It's a lot easier to say where you were 2 or 3 years ago, because don't forget, you file your return after the year is over, and the audit's going to start sometime after that. They're going to realize there's a problem or think there's a problem and try to audit you. And by that time, you're going to say 3 years ago, where was I on that Thursday? How do I prove that I didn't stay overnight at my apartment in the city? You want a contemporaneous calendar.
And this issue comes up, sometimes you don't even realize it. So one of the most recent cases, a gentleman had a house very close to where his business was, and he rented out 2 of the apartments and had one for his elderly parents. And it turns out New York State came in and claimed that that was his permanent place of abode. And because he had a business around the corner, he spent more than 183 days in New York State. It was Staten Island. He clearly lived in New Jersey, but his business and his parents were right there. And now he had the burden of proof to come in and show where he was every single day and prove whether or not it was a permanent place of abode.
And are these issues usually resolved through a negotiation process or through a hearing process?
Right. So you start out with the audit, and you're providing all the proof, and you can negotiate at that level with their supervisors, et cetera. And then if you're not able to agree there, you'd have to go to what they call a BCMS hearing, a Bureau of Conciliation and Mediation Services. It's like an appeal where you get an independent New York State employee involved. And then after that, you go to an ALJ hearing or a tribunal review. So you could go all the way up the administrative ladder.
And then once it's kind of been deemed, or you're conceding residency, do they then come with an assessment of what you owe? And then is it kind of the next level of, well, how am I going to pay that? Or are we able to negotiate from that figure?
Right. Before you even get to the collection stage, though, I have to just say that when you're at anything over the BCMS level, it becomes public. So every detail about your life is now published. The color of your shared carpeting in your parents' bedroom, because that's where you're claiming you really live and not the apartment in the city. But yes, once an assessment is made and now let's say you are deemed to owe the money, collection issues arise. And then we could chat about that if you want.
Yeah, I think we're going to go on to that point next, but that could be kind of scary. It's kind of an intimidating process. So I think the first lesson is when you get that letter, open it up.
Yes.
Address it. Don't be intimidated and think it's going to go away, because that's probably the easiest it's ever going to be, is when you get that initial letter, even though it may sound a little scary. So get in touch with an attorney. Get in touch with a firm like yourselves to do this.
And
also makes you
communication
wonder
is
how
key.
many people are out there that are, potentially have this ticking time bomb and are not aware of it.
And communication is key, because I see that the auditors respond more positively when you're responding to them. If you ignore their letters, they're not as nice when they finally get you.